Hello everyone, welcome to the channel. Yesterday we had a very clear discussion on how the market will behave today. I told there is a liquidity pool out here. Market might go like the same way like how we predicted. It can go give a closure, let it go, and some kind of reaccumulation here, and then it might go up. I told I will not be interested in buying this market or trading in this market because there will be huge decay in when it comes to option buying. See, this is what I talk about discipline. We have to make sure that our trades are executed in such a way that we are always in the right end of the market. See how the market behaved. It gave a upward movement, it gave a breakout structure saying like market is ready to go up, and then market went up. This is what market will do as a drama when it comes to liquidity. I told it will come down, it will make sure that you are going to trade in the downward direction, then it will move in the appropriate direction. This is what has happened today also. Anyways, let's do the prediction for coming week. I mean, like on Monday, how the market will react. So before even we start, the way we will do the prediction when it comes to week by week basis is we will start with the narrative building. Before even we start with narrative building, I will delete all the other earlier marked things with respect to the chart. So how we start with narrative building is we will start with the previous week's high range and the current weeks or the previous week low range. This is our going to be our trading range. So then what we will do is we will see to the left whether market has any significant reaction points from where the market has reacted from weekly perspective, and we will see what is the price action which is happening in the weekly perspective. We can see that market is currently in a bullish trend. So our focus would be to buy the market to take it to higher. This is going to be our prediction from a weekly perspective. So we will be looking for options to buy the market. We can see that it is currently gave a break of structure, came back to this demand in weekly perspective, and it is currently reacting from the demand. Okay, so then we will move to daily perspective and we will see what is a price action or the structure in a daily perspective. So from daily also it is clear that market has given a break of structure and it has not given a closure above this. It has just went up, did not give a closing till now, and it has come down and it is kind of ready to go up is what we can see from a daily perspective. Also we can notice that one more point, that from a daily perspective market has come down and tapped this demand and it has started to move up. So from daily there are no other imbalances from this range. Okay, so then we will go to 4 hours perspective, and 4 hours also it is almost the same. And one thing which we can notice out here is this demand market has reacted, but it has not given a break of structure yet. So understand this point very clearly. Market has come down all this way. From a demand, it has to give a break of structure without breaking the demand. What do I mean by break of structure is the last formed high point with respect to the market is this point. If the market goes above this, then from pullbacks, it can go up even higher. This is how the market will move in phases. Okay. So moving on. So we don't have any other significant points in 4 hours, but in 1 hour, we see something interesting, that there is a gap which the market has left open as part of today's session, right? Market opened gap up today and it has traded above. No problem. There is no supply zones here from 4 hours, sorry, 1 hour perspective. Okay, I will delete this demand for now because this demand is no longer valid because market has already reacted from this demand. If it has not given a break of structure yet, then market might come down all the way to search for the next possible demand. Okay, so ideal scenario for market for Monday would be if market comes down and reacts from this from a smaller time frame, we can see to take the market higher. So our immediate targets on the upside are this supply which we have as a gap, and this is the last supply which we have as part of a reaction point from where the actual change of character happened. There are no other supplies in between. If you see, this supply is also tested. This supply is the only supply which is left open as part of 1 hour perspective. Okay, so trading range is going to be from this place. I'll keep it to this. So this low to this high will be our trading range for Monday. Okay, so then we will go to a shorter time frame, like 15 minutes or 15 minutes time frame for actual setup formation. So what will be the best case scenario here for Monday is, Monday if it opens gap down, if it opens gap down and gives a positive reaction from this particular demand, then I'm interested to take the market higher. Okay, it's the same case what we discussed yesterday, when it comes to flat opening and going up. Now since it is opened the gap up and gave a break of structure, I wanted to make sure that if the market is coming down, I am not interested much in buying puts, but rather I'll be focusing on this demand and see if I can take the market higher. So why am I not interested in buying puts? Because market is currently in an uptrend, so it can react to any of these places. Even for this liquidity point, it can react from this liquidity and can go up. So when you are buying puts, you might be facing losses only. There is no other. You have to plan your trades in such a way that when you are buying or entering any kind of trades, you need to understand why we are entering the trades. For example, if market opens flat and if it gives a negative reaction from this particular supply which is left open, then I'm interested in buying puts and taking the market lower. Okay, so negative reaction from the supply and positive reaction from this demand, I'm interested to take the market higher. So what in case of gap down? Gap down, same thing happens. If I get only a positive reaction from this particular demand, I'm interested to take the market higher. What if it opens very big gap up? In case of very big gap up, this is a last supply which is left open, right? In our trading range, then I'm interested to take the market down. I am not interested to take, like, I'm not interested in the upside range. The reason why I'm saying I'm not interested much on the upside range is, if I go back to 4 hours perspective, where can the market react from? That will be my question. If I'm going to buy a call, what is going to be my stop loss? I don't have a stop loss. If market opens very big gap up and if it goes and trades above, where will be my target? I cannot keep this as my target, right? Because where will be my stop loss then? So this range is not very clear for me. So in case of not clear boundaries, if you had seen earlier videos when market was trading in this range, I was saying very clearly that if the market is going to go up, I am not interested in the market because I don't have an upside range. I wanted to trade in a range where market is showing clear cut signs. If the market is not giving any clear cut signs, then I'm not interested. See, even today, if you see yesterday's video, I was very clear on how the market will be reacting today. That is what is a clarity which you should always have. Anyways, so keeping the video short, if you like the video, make sure you subscribe the channel and share it with your trading friends who will be interested in more such educational content. We'll meet in the next video. Thank you so much.